perhaps the cherry on top of all of this, we've got Frances Horodelski on the desk for the next half hour. And I'm so grateful that we do. We also have Eddy Gifford joining us to talk some of the big moves that we are seeing in the market right now. He's joining us from TACTIVE. I want to start with you, Frances, kind of the general tone that we're seeing out there. And I mentioned in my morning note that the rally is on the Fed pivot, this hope that we're done with interest rate increases, which happens to be the 7th time that we've rallied on that in 2 years.
As I used to say, you can't rally on the same news more than 3 times, and obviously this is happening more than 3 times. I think the market's also rallying to some extent on this prospect of rate cuts in 2024, and I'd be suspicious of that. I don't think they're going to see, I mean, some people are looking for 4 cuts. I don't see that, and in fact, cuts would be a bad thing. I think cuts would be indicative of something falling apart. So I'd like to see the pause. I'd like to see some stability and market rates coming down. And as market rates come down, I think stocks can go up, at least for the next 3 months.
I'm going to utter the dangerous words in the financial markets. This time is different because historically speaking, about 4 months after the rate pause is a rate cut. This cycle could be different. It could be a longer pause. Certainly, that's what Fed members are talking about. Let's bring in Eddy, particularly on Frances's point that, you know, cheerleading for a rate cut means that something is falling apart in the economy.
Yeah, definitely. You know, when you're looking at the big picture and you're paying attention to macro, it's hard not to feel like a little doom and gloom. But the reality is that we need a pause to kind of see if things are working. And if things do start to fall, it's going to be, or rates specifically, it's going to be because something broke under the surface. And so, yeah, the macro view says, hey, there's a lot of cracks. But, you know, is this time different? I'm not so sure. I think that, like history has shown, a lot of times we go a little bit too far and then something breaks and then we have to fix it after the fact. I don't think this time is different, but macro can take a lot longer than anyone wants to believe. And so it could be 12 months, it could be 18 months before we see something break. And we can't run away because we think something might break. We got to attack and just be flexible and nimble.
In late 2022, early 2023, I think it was consensus that we would have a recession by the end of this year. It has not happened in the U.S., although that's debatable in Canada. You talk about macro cracks. So what would be the things for your portfolios you'd be looking at to either get more cautious or more bullish from a macro sense?
Well, in general, like the biggest thing that we're watching is the bond market and how interest rates are affecting things. And the other thing we're paying very close attention to is the consumer. And generally speaking, consumer demand is good. The question is how much of that consumer demand is driven by debt and how much of that consumer demand is just driven by cash money in the bank. And I would lean toward it seems like a lot more of that demand is driven by debt lately. And it only takes so long until consumers can't make their debt payments anymore. And so that's the thing that we're probably paying the closest attention to is when that starts to implode. That typically is some type of waterfall effect that happens over the entire market in general. If we're looking at, you know, closer just at the portfolio itself, we're not running away from some of the big names, the technology and that type of stuff. But we are making sure that we do have stops in place in case the market turns on us, or making sure that we have some type of hedging in place to at least provide some insulation to the portfolio.
Are you buying Microsoft?
Microsoft is an interesting play, especially after this weekend. Yeah, you know, we've seen OpenAI kind of, I guess, fall apart a little bit over the weekend with the board saying he's gone. No, we're going to hire him back. No, he's gone. And Microsoft bringing Altman in to their division. So I think that short term, Microsoft is a good move because there's going to be a lot of buzz behind the fact that they're internalizing AI, so to speak. So we'll see what comes up in the investigations about what the true why was of everything. But it definitely seems like Microsoft could at least run into year end.
Eddy, thanks so much for that perspective. That's Eddy Gifford joining us, wealth advisor at TACTIVE. I mean, Frances, I've watched in awe this story unfold between Sam Altman, OpenAI, and Microsoft. And I think to Eddy's point, so many more questions than answers. It's the why of it, truly, because the board's explanation was that he was kind of inconsistent with his communications.
Yeah, that seemed like kind of a lame excuse for getting rid of the founder and demoting the co-founder and bringing up this other woman who I'm certain is totally capable.
Well, then now she's out.
And she's out. Sorry,
as the interim. That was just interim for the weekend.
I think the big thing is that. Half of that company is owned by Microsoft. They didn't have a position on the board, which was kind of odd. But where are the owners of the other half of the company? So what do they have to say about the prospect of all of the, and I think that's about $13-14 billion worth, depending on how you value the company. So what do they have to say about 500 or some number of people crossing the street to Microsoft? Because that's what they're saying. Does it skip a beat in terms of Microsoft's development of its AI products and, whatever they might be? And in all of this, on Friday, I think it was Friday, it might have been late Thursday, Google said it will be the first quarter for their next generation AI product as opposed to the end of this year. So where's Google in all of this? And that's the horse I'm watching, actually, is the Google horse, because I think the Google horse and Gemini may in fact be better than Copilot and Microsoft's product. But we'll see. Would I buy Microsoft here? Probably not. So
that's interesting. Maybe Google is watching this. And it's hard to believe that this is not going to cause some sort of product delay when you have 500 of your 700 employees that say, you got to basically start this thing up from scratch, even though you have all of that sort of intelligence built in. You mentioned, what do the other owners have to say? I mean, the structure of OpenAI is still something I haven't totally wrapped my head around, because it's nonprofit, and then they have this for-profit subsidiary, and then basically 4 people were able to oust out the CEO.
And nobody seems to own any.
Yeah, and he himself has said, I have no equity position, Sam Altman,
and it is, I didn't appreciate that the woman who was the CFO was going to be CEO, and now she's gone. So it's moving so fast. I heard somebody call it Downton Abbey in terms of it is a bit of a soap opera when you think about the ins and outs of it. Sam Altman is an interesting man, and
one with a lot of backing. The amount of people and the caliber of people that were vocally backing him without really knowing the details of why he was fired. I mentioned Eric Schmidt. He's calling him a hero of his. Vinod Khosla, who's a prolific VC investor and an investor in OpenAI, saying that he'd bet on Sam on sort of anything. So really somebody who has the world's backing, at least the AI world's backing, and his own employees. So you have to wonder, where did the chasm erupt?
Yeah, so one of the things that I was thinking of, and I'm no expert, but one of the things I was thinking about when this came up was his early discussions on his concerns about artificial intelligence. And he was quite vocal on the risks associated with OpenAI. And I just wonder how that worked its way through the company, and caution or no caution, but I would expect more a cautionary approach given that. And maybe in the background he was talking more about the risks associated with the OpenAI, to other investors or the employees. So that always kind of stuck in the back of my mind as a bit of a hero, talking about heroes, as a bit of a hero and saying, hold on, folks, this does have some issues associated with it. I do believe it should be more regulated. So there's, obviously a lot of things we don't know, and maybe by the end of the day we might know more, or probably less.
Well, probably the narrative has completely changed in the last 5 minutes, because that's how quickly this thing's moving.
And certainly Microsoft hiring Sam Altman and a couple of others makes a whole lot of sense.
Of course, it's a big win.
Great move. I mean, I don't know why it took a couple of days, but and probably legal more than anything. But that was a smart move.
All right.